Alright, I'm over at the New York Post. Plunge Protection Behind Market's Sudden Recovery by John Crudile. I'm surprised this guy is even allowed to write about this at the New York Post. Anyways, I wanted to go look at this. First of all, I noticed last week when the market was going up, many individuals that I follow, or a few individuals, were saying that, hey, the Plunge Protection team was behind last week's rally. Some other traders I talked to saying, hey, how did the market go up like that? This author of the article has some sort of suggestion. Let's look at this. Mysterious forces were trying their best, but they couldn't keep the stock market from swooning Wednesday. Alright, and then he goes on to talk about the markets in general, and then we could go to this paragraph here starting at But let me explain about the unknown forces in the market these days. Call it by a nickname, the Plunge Protection Team, or call it the President's Working Group on Financial Markets, the official name given to the group when it was formed by President Ronald Reagan after the market turbulence of 1989. These forces may be working from a script in the Doomsday Book, which the U.S. government recently fought to keep secret when it was brought up last week during the AIG trial in Washington. Here's the bottom line. Someone tried to rescue the market last Wednesday, and it's becoming a regular occurrence. The details of last Wednesday morning are these. At the same time the Dow was off 350 points, the S&P index was down 43.8 points. There was an enormous decline in just 11 minutes of trading, and it was an indication that Wall Street was not having a good day. Then someone started buying S&P future contracts en masse. 21 minutes later, the S&P index had regained 30 of those lost points and was back at 1861. Maybe you'll believe that there was some manipulation going on if you knew that a guy named Robert Heller, who was a member of the Fed Reserve Board of Governors until 1989, proposed just such a rigging as soon as he left the Fed. Look it up. October 27, 1989, Wall Street Journal headline, Have Fed Support Stock Market Too? By Robert Heller, who had just left the Fed to head up the credit card company Visa. It would be inappropriate for the government or central bank to buy or sell IBM or government motor shares, Heller wrote. Instead, the Fed could buy the broad market composites in the futures markets. In case you don't know the lingo, Heller is proposing that the Fed or government purchase stock futures contracts that track and can influence the major indices. These contracts are cheap, and a government could turn the whole stock market around quickly, but probably not permanently. Wow, doesn't that seem a lot like what happened Wednesday at 9:41 when S&P future contracts were suddenly and mysteriously scooped up? And then it just goes on. Here, let's look at the last two paragraphs. But times change, and so does thinking. In recent weeks, we discovered that the CME Group, the Exchange of Chicago, has an incentive program under which foreign central banks could buy stock market derivatives like the S&P contracts at a discount. It's not that these foreign banks need a break on the price of their trading, but it does show that there's a backdoor way through foreign emissaries for the Fed and U.S. government to prop up stocks like Heller suggested, and maybe not get caught. My own thoughts on the Plunge Protection Team. Is there market rigging going on? Most definitely. However, besides buying up the S&P future contracts, there's more pieces to the puzzle that this author is not talking about. And I could show you what I'm looking at, and you guys could determine whether or not this is accurate or true, or how you feel. Alright, what I'm looking at over here is a chart of the S&P, and you could also see in the blue here, it's the dollar-yen chart. And like I've said many times in my videos, that what happened actually from right now, you could say 2011 to 2014, the dollar-yen has been in tandem or is going in the same direction as the S&P and Dow. And my thesis is that the liquidity coming from the dollar yen is going in to the US stock market through this yen carry trade. And if you want to look at a chart from the 90s, Alan Greenspan noted a term called irrational exuberance, right? And he said that, hey, the stock market's going up because of irrational exuberance, right? Long story short, my reasoning and why the stock market had such a huge run up in the 90s is because of this dollar yen. This was one of the reasons, in my opinion. But this trade, it unwound in 1998, right around the time of long-term capital management and the Russian bubble about to burst, right? You could see the dollar yen was at 140 and then it crashed down to like 110-ish. So that was a huge and powerful move over the past few years. However, the market continued to rally, and I could explain to you why I felt that the market continued to rally. But if you want to look at from this point, 1996, all the way to long-term capital management, this provided tremendous liquidity, in my opinion, to the overall stock market. You could see going pretty much in the same direction. Then all of a sudden, long-term capital management happened in blue, dollar yen faded. However, the stock market continued to rally. Why did it continue to rally? In my opinion, it continued to rally because the House, under Newt Gingrich, they cut the capital gains tax rate. So that provided an extra source of stimulus, which made the market go up. Over here, what made the market go up? What provided the extra stimulus? You have to remember that Clinton raised taxes. When you raise taxes, that's usually not bullish for the economy. So there needs to be another stimulus. The other stimulus was via the yen carry trade here in the blue, which made the market go up, which provided liquidity because you take the yen, borrow, invest in higher interest rate currencies like the US dollar, bada bing, bada boom, stock market went up. And we could look at what's going on right now. Alright, so if you're looking at this dollar yen, once again, that I've showed you many times, you could see this chart acting in the same direction. It's going in the same direction. And I didn't update it for what happened in the last 2 weeks, or the last week, I'm sorry. Today's the 26th, I believe. Yes, today is the 26th of October. And last time I had it was the 17th. But anyways, 17th, the Dow was 16.3. Last week it was 16.7-ish. And the dollar yen was around maybe 108. So you could see it acting in tandem. Or it's going in the same direction, long story short. Just extrapolate the data here. Anyways, what does this have to do with the plunge protection? So what does this have to do with the plunge protection team, like I was trying to say? Well, yeah, you do see instances where unusual amounts in S&P futures are bought. A lot of people speculate that it's the PPT, the plunge protection team. However, in order for this to work, there needs to be some other items happening on the back end, or some other transactions happening on the back end. It's in my opinion that the graph that I showed you over here is the other part of the equation that makes the stock market go up. And if you could see, these moves are going hand in hand. So people could think that, hey, it's central bank intervention. It is central bank intervention because of, first of all, Abenomics. But secondly, the other intervention is going on in the plunge protection team or other swaps and agreements that we don't know about. Eventually, free market forces are going to take hold and make the market pull back. But if they continue to jam liquidity into the system, we're not going to get deflation. Or we're not going to get the 1930s type depression. So, long story short, there is manipulation in my opinion, but it's more than the plunge protection team. It's central banks acting in cooperation to try to make these markets go up. And one of the devices they've created is this yen carry trade, right? Because it's a low interest rate currency. You take this currency, borrow, invest in other higher yield currencies, and bada bing, bada boom, markets go up until the yen carry trade unwinds, meaning that the Japanese yen appreciates. This whole scam works out if this Japanese yen in blue weakens. But that's another talk for another day. Thanks for listening to me, guys. I'll see you next week. Bye.